In this video, I'm going to show you what to look for when investing in Brisbane property. Hey there, I'm Nathan from Invision Property, a buyer's agency where I help investors buy properties in Brisbane and other states. I'm going to show you some of the things that you should look out for when investing in property in Brisbane. Now, I know that everyone's saying it's a good time to buy an investment property, but it can be tough not knowing where to start. So that's why I'm here. So stay tuned and I'll show you everything you need to know. I'm going to break this down into 10 steps. Step number 1, look for areas for growth. Brisbane is rapidly expanding in cities, so look for areas that have predicted growth. Some basic things to look at is existing infrastructure and new infrastructure. These are new projects that are coming in through the government, and also private projects like massive warehousing distribution centers and other projects which will create jobs, which will then drive population growth, which will then drive demand. Number 2, research that area and the demographic that you're looking to buy in. Look, using a platform like microburbs, how many of the properties in the area are owner occupied rather than owned by investors. You can also look at affluence scores, looking at how much the median household will be earning in that area, public housing, and a number of other key indicators to work out, hey, is this the right suburb that you should be buying in? Number 3, consider your budget and find areas that are more affordable. Yes, buying 15Ks out from the CBD is going to be your major option for getting capital growth. But when it comes to trying to get rental yield, you're going to have to go a bit further out. You're probably looking at more 20, 30Ks out, where you can probably get around that 5% yield. That's where you're going to really have to get your sort of research hat on and start doing some research on the local suburbs that you're going to be buying in. These suburbs, when the market does have its boom, or as over the years you do have that annualized growth, these suburbs should receive the same amount of capital growth as those suburbs that are more inner city. So not just focusing on spending the most amount of money, but looking at your budget and looking at your rental yield and how much you're going to want to get in as rent, so then you can live a sustainable lifestyle, is the key to sustaining this, holding this investment property for the long term. Number 4 is getting a really good understanding on the local councils. So what you want to know is what the local zonings are, how to go onto the council maps and look at the zonings and work out what each zoning is. For example, you get low density, that's more like your standalone house. So most of the time you can't really subdivide it or anything like that. But then within certain councils, say Brisbane City Council, if you've got 800 square meters of house, but it's on a low density zoning, that means you can subdivide it into 2 400 square meter blocks. But if your property is within 200 walking meters, which you can easily double check on just using Google Maps, or you can use RP data, but that's more of a paid subscription. But if it's within 200 walking meters from a city centre, that means you can subdivide a 600 square meter block into 2 300 square meter blocks. But it may still say it's low density. So this information can easily be found on the Brisbane City Council websites. If you're looking at a certain council, jump on their website, try to wrap your head around their rules around the zoning, and what you can do with the blocks of land. It comes into effect sort of when you're maybe looking for a family home. You don't want to spend $1 million or $1.5 million on a house on a street where there's going to be a lot of townhouses or apartments down the track, because what happens with that standalone house is it actually devalues over time, because that street's going to have a lot of cars. So down the track, when they've develop that street and you've got new buyers coming through, they're going to see the cars and they're not going to really want to buy that property. But you sort of flip it. So when you're going to buy an investment property, it's actually a bonus. If you can buy a block of land that can be subdivided, or you could add a townhouse or apartments, that increases the value of that property, and that also compounds the capital growth over time. Down the track, you'll be able to, you could even develop it yourself, or you could sell it to a developer for 20% more. It's really the sky's the limit, depending on how the market goes. But the growth really compounds, and getting a good understanding of the local councils really just could potentially skyrocket your new investment property. Number 5, talking to local real estate agents. So This is probably the fastest data you could ever receive. You can jump on RP Data, H tags, and all these online platforms, and they do provide some really good data. But simply picking up the phone and calling local agents and asking them questions like, you sold this property recently on 23 Smith Street, how many offers did you have? What style of buyers came through that property? Through that process, you'll get a good gauge on the local demographic as well. Hopefully you can question them about local amenities, how he's seen the market, and then you'll get a better understanding of that local market and whether or not it's a good place to invest. But you always have to be wary that the sales agent is working for the seller. As soon as he can, start that conversation with you, he might start to build that relationship, because when he's got a property, he'll sell it to you, especially if you're interstate. So you have to be very cautious of that. Go and chatting to the agents, build that relationship with that agent as well to find off-market opportunities, but always be wary. Their job is to sell you properties. Maybe 2 weeks down the track, or even on that week when they show you a property, they will tell you it's the best property in the world, because that's essentially their job. Number 7, make sure there's no flooding on the block. This is very important, being in the Brisbane City Council, or not Brisbane, but Logan and Ipswich. It floods across southeast Queensland, but it's a very easy search. Like, you can jump on the local council websites, depending on where you buy it, and you can do a flood check. So chuck in their address, you'll then get a report on that property, and it will indicate to you if this property's got flooding issues or if it's flood free. So that's a really easy check you can go and do, but you need to check that yourself, because when you look for a property, most agents don't really disclose it. You'll never see it in the writing. Their job is to get the highest amount for the property. So if they start disclosing that it's a flood affected property, price will go down for them, and it's hard for them to get their top dollar for their clients. So always make sure you do your own checks, so you don't fall into the trap of buying a property that has been flood affected and it has potential to get flooded in the future. Number 8, have an A-team set up. So by an A-team, I mean have the right mortgage broker set up. This is going to be a broker that really knows ins and outs of all the different banks. They normally know different strategies to, get deals across the line a lot quicker, and they have a very high confidence level. By confidence level, I mean, if you've got a property and you have to go cash, you can email your broker and you can say, hey, I need to go cash. They can say, yeah, go ahead. I've looked at your situation and I believe that there's a very high chance I'll get it through. There's always that risk, but if you've got a skilled mortgage broker, they should be able to give you that advice at the time, because that could make and break you getting a really good deal at a good price, just simply going in with a cash offer. The next person is your building and pest inspector. Over the years of being a buyer's agent and working with a number of building and pest inspectors, is that I worked out quite quickly that you get some really shit building and pest inspectors, and then you got some that go over the top and they check every little bit and piece of the house. So what you really need is you need somebody that's going to go through every nook and cranny of that property. They're going to take a picture of everything that needs to be fixed, because it's so important for when you need to work out how much it's going to cost to fix the properties and the issues, but also you use this as a leveraging tool to push the price down. So having a good building and pest inspector is going to make sure you don't have a house that's full of termites, and also there's no major structural issues, and then you've got a report that you are going to be more confident on this property, because it's a big purchase. You're going to be spending hundreds of thousands on this asset, and if it's got these issues in it, it's going to be a nightmare. So you want to de-risk this whole property purchase by having a good building and pest inspector. The next person, you want to make sure you have a good conveyancer on your team or solicitor. These guys are going to be able to guide you through the legal sides of the aspect. Also, they can help with the negotiations if we get into a bit of a pickle. So making sure you just don't go for the cheaper conveyancers. Sort of shit hits the fan, or if it ever does, you want to be able to call up. My personal conveyancer that I use in my A-team, he's a lawyer as well, so he knows the ins and outs of law, and he can help me work out, hey, what's the best avenue for my client in certain situations. So having a good conveyancer / solicitor is key to making it a smooth purchase. And last but not least, having a good buyer's agent. So I'm a local buyer's agent here. I've been buying properties for the last 6 years across Brisbane and some other states. So, having a good buyer's agent on your side means that you're going to have an experienced buyer. They've purchased at least 70 plus properties, so they know what to look for in a property. Other thing is a skilled negotiator. You're going to have somebody there that really knows how to negotiate with agents, knows their tricks and tactics, and is able to use their tricks and tactics against them to get the price down by tens of thousands, or in some cases hundreds of thousands. Another major thing is making sure that all the research and due diligence is done correctly, so then you don't end up overpaying on a property, or you don't buy property in the wrong area where you end up buying a dud. I've heard time and time again with a lot of families that have gone down the route of buying house and land packages, apartments that were off the plan, and they paid way too much for them because the person that was selling you them this off the plan product was getting a big commission from the developer, and they just got really misled. But long story short, they now have these properties that they couldn't even sell now for the price that they purchased it for, and this is years and years later. I'm truly passionate about this. You really need to do your research so you don't overpay and you don't get stuck and you just don't make these costly mistakes. Last but not least, number 10 is enjoy and watch your property investment grow. Buying a investment property is not really a get rich quick scheme. It's an asset you'll hold over the next sort of 5 to 10 years. And while you see it grow, you'll see your capital growth grow within that property. Eventually, you're going to be able to use that equity to buy another property. But over the next, 10, 20 years, you can accumulate anywhere from 3 to 4 properties. So when it comes to retirement, you've then got some actual investment assets. You won't necessarily keep all these properties. This is where I think a lot of people kind of get a bit confused. You may actually do a sell down of one of the properties. Say for example, you buy it for 500k and it's eventually worth 1.5 million. You may eventually sell that one and take that $1 million, and then you'll pay down the debt of all your other properties. And then boom, now they're all got no debt and they're creating a positive cash flow into your life. Like they're providing an income really. Hope these 10 tips helped you navigate the world of buying an investment property. If you are looking to buy an investment property, reach out through my website and book a discovery call. But thanks for watching.